with a series of policy launched by Canada government to hammer the real estate market and multiple interest rate raise. Will Toronto real estate market crash? Hi, my name is Priscilla. I'm your real estate broker in the Greater Toronto area. Today, let's take a look together at the newly available Toronto Real Estate Board Market Watch Report. Like in the previous months, I used two graphs. The big one is recent April's performance. The smaller one is one more month before in March. So when we compare the bigger chart to the smaller one, we see month over month change. Together, we study 5 parameters. Under each one of them, you'll see a percentage. This is year over year change. Okay, so let's jump into average sold price. So average sold price came down from last month's 1.3 million to 1.25 million. This is a 3.6% decrease. The decline trend continued from February to March to April. So the cooling down of the market is quite obvious. And if we take a look at the transaction volume, we can see it further went down to 8,000. So this number is a 40% decrease from same period last year and also much smaller than March 11,000. But we shouldn't conclude to say the market is inactive. Why I say that? Now we are looking at the transaction volume for the past couple years. So we can see last year in spring, we had a historical high transaction volume, particularly in March and April. In March, we realized almost 16,000 sales in just 1 month. That's highest number for a couple dozen years. So last month, we had almost 11,000. That seems to be a big decrease from 16,000. However, 11,000, that is still a very, very active number. So this month, we came down to 8,000. So 8,000 seems low, no matter comparing last year or last month. But if we look at the normal year, take 2019 as example. Now, 2019 was before COVID, was a normal year. You can see we're not too far away, right? It's actually still a very normal number for any normal year. Okay, so we know that the market, in terms of the activeness, hasn't acted too strangely, but we should pay more attention on the supply side. Okay, the active listing, we had 13,000. This is a much higher number than last month's 10,000. But if we look at the new listing, we will notice that the seller isn't panicking. Not because since February, the market start to show weakness, is turning soft. There are a lot of sellers join the market, try to get rid of their properties. Because if we look at new listing, 18,000, not only it's smaller than same period last year, it's also smaller than last month's 20,000. So once again, the sellers are not panicking, at least not just yet. Actually, I would think many of them are holding their property back. Maybe in their heart, they're still hoping in the future, the price is better, they will rejoin the market. But now is not the moment. I want to introduce one more index this month to reflect the dynamic between supply and demand. This is called sales to new listing ratio, SNLR. This ratio is calculated by dividing number of sales by the newly available listing properties into the market. So when this ratio is between 60% to 40%, the market is deemed as a balanced market. But if it's above 60%, it's either there are so many sales or because there are not enough listings, the market is deemed as a seller's market. Opposite, if it's lower than 40%, it's either the sales is not very active, there are not so many properties are being sold, or there are a lot of newly available, newly entered market properties. So the buyers would have lots of properties to choose from. In a case like that, it will be considered as a buyer's market. So now we're looking at this number. Ever since year 2020 September, the market has entered into a strong seller's market and remained at seller's market for very, very long, over a year. The situation only turned around at the end of last year. So you can see the SNLR ratio start to drop. It entered into balanced market a couple months ago and remained to decline in these couple months. In April, eventually it dropped to the edge of balanced market. If this trend continues, we will see the market is no longer seller's market, but instead we enter into buyer's market. So the competition among buyers are no longer fierce. They've got enough to choose from. Okay, one more data is the days on market. Once again, 11 days on market is still very short. However, the trend did say that 11 days is longer than same period last year, 10 days, and longer than last month's 8 days. We see the trend turning around. I also want to talk a bit about different area. So we can see 905 area, it's basically the suburb of City of Toronto. No matter it's detached, semi-detached, freehold, they each dropped over 100K. Take a look. Detached dropped from 1.63 to 1.53, right? Same thing for semi and freehold townhome. But City of Toronto, in terms of resistance to decline, it's a lot tougher. In fact, even if it's for detached, it went up from 1.92 to 1.95. As one category, one property type, I do want to draw attention. I keep saying condo apartment in City of Toronto, it didn't really increase as much as other property types. So when it comes to decline, it also doesn't decline as much. Last month, condo apartment in City of Toronto is 831. This month is 820. It's quite tough. So to sum, the market no longer favored sellers. The buyer nowadays has the turn to take time, really choose from a lot of properties and pick the one they really like. In the future, how the market will turn, it will heavily depend on if multiple incoming interest rates will scare away the short-term speculators, or the investors heavily depend on leverage, or is it bigger for the newcomers to release their accommodation needs. Remember, last year we had a historical high, 401,000 newcomers to enter Canada, and this year this number is going to be broken again. We're estimated made it to welcome over 420,000 new immigrants. Okay, so let's watch and see which force is going to win. This is the end of this video. Looking forward to connecting with you soon in next video. Bye-bye.